Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news oil prices are up sharply today. But first, in its latest Beige Book review of economic conditions around the country, the American Fed reports businesses have scaled back or postponed investments due to concerns about international trade tensions. Overall, this survey sees the American economy expanding at a moderate pace. And the Fed is continuing to signal that rate hikes, even if gradual, will continue for the next few years. Pointedly, they say that this will be the case even if their rate curve inverts. On that, they say this time is different. American producer prices fell in August from July in a surprise shift lower. This was the first month-on-month drop in about 18 months, and it happened for services. Overall, it means that year-on-year producer prices are up 2.8%, a big reduction from the annual growth in July when they were up 3.3%. Also shifting lower are American mortgage applications. They fell in August and are still falling in September, and by larger levels than analysts were expecting. EU industrial production has also fell in July, and that slippage has been cumulative, so that year-on-year levels are now lower. But the President of the EU is sounding positive. In his State of the Union address earlier today, he called for the euro to be the new dominant global reserve currency, saying the US is abrogating its international responsibilities and the EU is ready to step up. On the trade front, Canada's leaders are huddling, trying to figure out their response to a recalcitrant US position on NAFTA. The Mexicans say they're prepared to go it alone. And the Americans say they're reaching out to China in one last attempt before new higher and broader tariffs are imposed. In China, their central bank is back injecting money directly into their economy, supposedly to cover a short liquidity strain due to tax payments due, but more likely as part of an overall campaign to shore up lending and demand as they try to keep the adjustment hurt from servicing. Today, the US Treasury 10-year yield is lower at 2.96%, a 2 basis points dip in a day. However, their 2-10 curve is tighter at just 21 basis points. The Aussie government 10-year is at 2.59%, that's up 1 basis point. The Chinese government 10-year is at 3.70%, that's also up 1 basis point, while the New Zealand government 10-year is at 2.62%, up 2 basis points. And gold is rising today, up a chunky $12 at $1,208 an ounce in New York. And US oil prices are up sharply as well for a second day in a row, and now just over $70 a barrel. The Brent benchmark is also up higher, now just over $80 a barrel. These are big, fast rises brought about by a sharp fall in US crude inventories, the Iran sanctions, the expected impact from the US hurricane, and a growing fears of a big typhoon will hit Hong Kong, Taiwan, and the Philippines soon. And the Kiwi dollar is starting today firmer at 65.6 US cents. On the cross rates, we're at 91.5 Aussie cents and 56.4 Euro cents. That puts the TWI at 69.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.